Alright traders, this is going to be an educational video. A lot of traders have been actually asking me to look at GBPUSD, which I have not been trading for quite some time actually. And if you have been following my analysis, then you might have seen me shorting GBP around UK election time since November, and then I took a little break from GBPUSD. And I've been actually waiting for a specific kind of pattern to develop on GBPUSD, which has not happened yet. So I've not been trading this pair. However, my fellow traders have been actually asking me about, like, what do you think about this pair, and how they could have traded this. So this is for them. What I see here is that there is a 4-hour consolidation around here. So in this video, we'll be not looking at swing trading. We'll not be looking at daily time frame or 4-hourly time frame. We'll be looking at lower time frames like 1 hour, 30 minutes, or 15 minutes, to see whether the structure or the Fibonacci levels or the strategy that we use for swing trading can that be applied for day trading also. So as I always say, when you see consolidation, when you expect consolidation, expect a lot of opportunities as well. But it all depends on the time frame that you're trading. So 4-hour time frame, this is the consolidation that actually happened around this moving average. So we're gonna just look at that and nothing else. So I'll just mark the boundaries so that I know where I need to look at, and let's see if we can find good opportunities on lower time frame. So we already know that 4-hour time frame has consolidated, so let's look back to see what kind of opportunities we could have actually got at lower time frame. So if I go to the 1-hour time frame, what I see here is that market actually has been creating this W kind of pattern. If you notice, if you watch closely, there is a W kind of pattern around here which actually formed. So I could have actually traded that based on Fibonacci. Then if you see, we also have an M pattern around here, so we could have traded that, and that actually gave us very good profits. And we also had this W pattern, so we could have traded that, and we could have actually traded this W pattern as well. So I can look at 4 different opportunities on just 1 hour. However, because they are not very clear on 1 hour, so we can actually jump down to 30 minutes or 15 minutes to see what kind of opportunities were there for us to take on day trading, for day trading. So I'll just quickly remove all these lines, and then let's jump on to 30 minutes. Now if I come to 30 minutes, this becomes much easier to actually read. You can see there is a W pattern around here, and what we do here is we start to measure using Fibonacci level. Now if you wanted, you could have actually gone to 15 minutes to see it even with much clarity. So actually let's start looking at 15 minutes. So this is how we do it on swing trading, and we're going to apply similar kind of principles for day trading. So because this is a W pattern, we could have actually measured this. So if I measure from top to bottom, I see market has come to 61.8. That means market could have gone to 78.6, confluencing with 127.2 or 161.8. So if I take Fibonacci extension and do this, market has come to 161.8, and now in this case it has actually gone a little bit upwards, probably because of some other barrier that might have been here, like moving average or something like that, but it did come to 161.8. so how could we have played this? We could have actually taken 2 kinds of trades on this. One is a long trade, other one short trade. Now that all depends on the confirmation. So what we could have done is we could have drawn the trend line, and you can see the trend line has actually caused this price to fall around here. And once this trend line was broken, then we could have actually gone for a long trade, and we could have stayed until we got this candle. So this is a pin bar kind of thing. So we knew that market was rejecting from that level, so we could have actually taken the profit there. Now another thing that is important around here is we actually started our measurement from here. However, we could have actually done it from here as well. So that comes from the practice, like more you practice on the market, better you become. So you can see the market came to 50%, and when the market has come to 50%, we can expect it to go to 161.8, again confluencing with 88.6, and that is why market could have come to this particular zone. So anywhere between 88.6 to 161.8, and you can see the market actually came there, it went outside this, and based on the confirmation on even lower time frame, like 5 minutes or something, we could have actually taken a trade to short this from this zone. So that's second way of doing it. Now there are two opportunities already in here. Now let's look at some other opportunities. So we also have this M kind of pattern around here. So let's start measuring. Let's see if we can actually do something. So one is, this is impulse, then we have correction, then we have impulse, then we have correction. So let's start with this first and see what kind of opportunity we have. So we have 78.6, which basically means that market could have gone to 272 or something like that once it has crossed this initial point. So if I take the Fibonacci extension and do this, then market has come exactly to 272. So that also confluencing with a moving average around here. So we could have actually taken this trade, and our profit would have been at 38.2, which is, if I take it from top to bottom, 38.2 is right there, and extended target would have been at 61.8 around there. So this is a very good target, very good profit making trade that we had. So we could have actually taken that. So there are three trades already in this consolidation. Who says that consolidations are bad for trading? No, actually, in fact, you can make more money in consolidation because they become very predictable with Fibonacci patterns. So if you know how to apply Fibonacci patterns, consolidations are actually very good for money making because they're so predictable. Now if you look at this M pattern, we could have actually done something about that as well. So if I measure it from bottom to top, I can see that market came to 61.8. That meant market could have gone to 161.8. So if I take this, it didn't go through 161.8. It did go actually, but then it went to 261.8, which is in harmony with the other pattern as well. So this is a very good confluence zone, and that's why we could have taken this trade. Now that's a reversal kind of trade. What we could have done is, actually, once we saw this midpoint broken, we could have actually taken that trade, that's short trade, because we knew that market could actually come around here, and we could have done that based on a trend line, simple trend line. So if I take this trend line and draw it like this to the midpoint, once this candle has been formed, we could have actually taken this trade. Very easy to spot and very easy to actually execute. So now if I go to the 15-minute time, actually 5-minute time frame, I can see another M pattern here. So we could have actually taken that, and that actually hit the profit target as well. But because we are looking at 15-minute time frames, so I'll just skip that for now. We have, there is an ugly W pattern around here, but this is just too ugly for me. Let's say let's measure it anyway. So what I'll do is I'll measure it in this way to see whether it is ABCD pattern or not. If I take Fibonacci tool and extend it from this point, this is 161.8, so yep, it is ABCD kind of pattern. So that means the market could have actually come to from this point to 61.8. so that's another confluence. So this point was very good. It had confluence of three patterns, multiple Fibonacci ratios, and then this moving average, and that's why you can see the market moved with good speed from this point. So now what we could have done around this point, so let's zoom out to spot more opportunities. If I see here, there is another opportunity around here. So we have this kind of W pattern which is developing here, and then on top of that we also have this kind of W pattern. If this point is equal, then it is not. So this is nearly equal, so this is not a W pattern, this is not a valid W pattern. However, this one probably is. So what I'll do is I'll take the Fibonacci tool and draw from top to bottom, and then I'll see that market has come to 786. It has not come to 886, it has come to 786, which means that market could have gone to 272 or 224 Fibonacci level. So I draw it from, sorry, I draw it from top to bottom, and see, this is where it is, 272, and that's the power of Fibonacci based patterns. So this is the zone that we were looking for to short. Now you could have gone to actually 5-minute time frame, look for a confirmation, and then short this market. Now I'll remove this drawing, and then now could we have done something around here in terms of the log position? Yes, we could. So all you have to do is just take the trend line, draw it from there to this place. You see, market actually created this inverted hammer, so you need to be careful with that, because this had a potential to reverse this price action. However, this candle was formed, and once this high, around this high was broken, sorry, this one was broken on 5-minute time frame, you could have actually gone for a long trade, and your profit target would have been 272 Fibonacci level, which is around here. Sorry, I drew that wrong. This needs to be around here. So this would have been your profit target. So this could have been easy 20 pips, and then once you have shorted from there, this could have been easy, how many pips? So from here, let's say assume you took the profit around there, so this is 28 pips. So I just remove these drawings, and let's assume you took this trade as well, and so how many pips are there from here? Let's say 38.2 is 20 pips, 61.8 was around, so 50 pips. 48 plus 50 is 90 pips. 90 pips are on this. Then you could have actually taken this trade, short trade, so from this point all the way to this place, 16, so 106 pips. And then you could have actually taken this long trade, so on the break of this midpoint, could have gone there, so 16 again, so 106 and 16 is 122 pips. Then you could have taken the short from there. That basically meant that going short from that point to midpoint, so 26, so 152 pips just from this point to this point. And if I put those drawings back again, those lines back again, let's see how much time it would have taken us to do that. It would have taken 4, 4, 8, 12, 8, 12 and 16. 16 hours. In 16 hours you could have actually taken easy 126, 130, near about 130 pips or so and profits, and that too with great accuracy. And that's the power of Fibonacci based trading. Fibonacci based trading works very well with structures and moving averages, and that's one of the things that I teach as well. So if you enjoyed this analysis study educational video, then hit the like button, and in the comment section let me know what you think about this video. Do you use Fibonacci for your own analysis? And do not forget to subscribe to my channel as well. Thank you.